Alrighty, hey everybody, Jeremy here with Escape Velocity Trading for the Market Bias Update Report for Sunday, January 21st and the trading week ahead. Diving in. Last week I had called out saying I would not mind more chop and development in this range. You can see I have marked between 48.41 and 4700 basically. I was really hoping we'd get one more week of kind of consolidation and breakout, sometime later this coming week, maybe like the 23rd, 24th, something like that. Did not get that. We ended up actually having a powerhouse move on Friday that kind of took most traders by surprise, if I'm being completely honest. And then a little bit of continuation here on the futures open as of about an hour and a half ago here on Sunday. But when we were talking last week, if I look here back, we were basically at this candle here to start the week. And that corresponded down to the MACD right here, where we had this tiny little bump up. And I was saying, kind of would like to see it roll over and have the price chop underneath that breakout level for a little bit longer to give the MACD time to set up. Even though it did go ahead and break out on Friday, it did give us a nice double bottom here on the daily MACD. And I really like trading double bottom patterns like that with a breakout above. It gives a little bit of a base, and to create that double bottom on the MACD, you need to have kind of consolidation like we had here. So even though we didn't have as much consolidation as I wanted, it did give enough time for the MACD to kind of pull itself together and is giving a bullish signal now. The RSI is still a little too early to tell. If we get a little higher pivot low here and we see this kind of tick back up this week, that would be great. If we don't get that and we see it kind of come back down into the previous pivot low and then bounce up and cross back above this pivot here, that would also kind of give us a double bottom on the RSI similar to the MACD. I would like either of those two setups moving into the week ahead, but we have confirmation to the upside here. So bullish is the path of least resistance moving forward on S&P 500, and we really don't have an upward target because this is all-time highs. And if we toss this out to a 3-week chart, you can see we actually have this beautiful looking cup and handle here, consolidation back to the 9 EMA on the weekly, and now confirmation to the upside. So the breakout is in play. If we wanted to throw a Fibonacci on here to try to get some kind of target for us in a long-term target, we could go out as much as, wow, the 100% all the way up at 5,400. I don't know if I'm that bullish here, but I would say breaking out anywhere up to about the 50% line, maybe 5,100 in the S&P seems to be in play now, as long as we can continue to hold this 9 EMA on the weekly chart. In terms of actual trades, I will probably be doing short-term trades, jumping in and out of stuff as I see fit, playing this breakout to the upside. If we go out to the NASDAQ, very similar. If we toss this out to a weekly chart as well and let it load, there we go. Again, you can see this huge kind of long-term cup and handle that's taken basically 2 years to form. Now we are breaking out. MACD on weekly looks good. RSI on weekly looks good. If we go back to the daily chart, the MACD did actually put a lower pivot, kind of tested and dinked around a little bit here during the price consolidation, and is now breaking back up to the upside. So I actually like the look of that. And that should come as no surprise, because if we jump out to our heat maps, this is a 1-week performance showing the percentage gains and losses for different sectors in the market over last week's trading action. And you can very, very clearly see all of the green in tech coming back in a big way. So most of this breakout on the major indexes is due to the strength in tech, and now we are just looking for follow through to the upside. If we go out to the Russell has been stuck in a long-term trading range here for the better part of a year and a half, almost 2 years now, basically, if we go back all the way back to here where it first broke down. But now we are seeing it fight for support, and I actually really like this chart setup. I think actually I am more interested to play this dip back to the 9 and support on the 9 weekly to the upside on the Russell as I am the S&P or NASDAQ. And that's just a personal preference, honestly. A lot of traders would look at the S&P and the NASDAQ and rate the NASDAQ as the strongest because of all the tech moves. S&P next in line because it's a breakout to all-time highs. And then the Russell third. And I couldn't disagree with anyone that has that read on the market. But I really like pullbacks. I tend to, just in my trading personality, not like to buy all-time highs. I tend to like pullbacks more than I do breakouts, just my style of trading personally. But I do really like this. And part of why I like it is you can see over the last year and a half of this chop, each time we've broken back to the upside of this trading range, we hit our head on the 50-period moving average, sold right back off, came back up, hit our head, sold back off, set a higher pivot low and broke through it, but couldn't hold, and we didn't have enough steam to break through the previous major pivot, so we sold back off, came up one more time, and this time we came into kind of a diagonal resistance channel there, bounced, hit our head, came back down. But this time, the very last time here, we broke through. We're now above that diagonal resistance. We're above all of our weekly moving average. And this time we came up, and instead of just coming right back down, we've had 3 or 4 weeks of testing support on this 9. And I really like that. That is kind of a change of character to me, seeing it come back down, test the 9, and hold this time. So anything with a break above the previous week's high at 1971 and change is going to be confirmation to me. And I'm going to be very interested in playing the Russell 2000 on this breakout. If we look at the daily chart, you can also see that we are breaking right now on Sunday, the 9 daily in a bullish manner. And we're also breaking the diagonal resistance going back the last, what is that? Let me get my other drawing tool. Going back the last 17 bars. So basically 3 weeks of pullback here, finally starting to see some signs of waking up and moving bullishly. So I do really like the setup on the Russell. Finally, for the major indexes, we go out to the Dow Jones. Dow Jones set a new high on Friday, pulled back just under it today. Confirmation to the upsides, anything above last Friday's high at 38,133. And we are just like 40 points below that right now. So I'm actually going to set myself alert for that breakout right now. If we toss that out to a weekly chart, have to even go back further. Yeah, so this is another big cup. And now we had the little handle here is consolidation and trying to break out of that right now. So I do really like the Dow Jones right now too, which is funny because I usually don't like that. I don't like trading the Dow Jones for whatever reason. Again, kind of a personal preference, but I don't trade the Dow Jones very often. But I can't ignore this large consolidation zone right here at the top of the chart and threatening to break out. So if we get a breakout of that 38,133, I think it has to be looked at. So put that on your radar as well. Going out to crude light. Crude light on the daily chart looks a little messy still. We had this big sell-off and pullback, and we kind of have a double bottom forming here. And we have broken out of our diagonal resistance line on the short term, and we are fighting against the 50-period moving average on the daily. If we get above that 50-period moving average, currently at 33.66, I think that is confirmation to the upside, and I will likely be taking a directional play on oil, mostly because I really like the support zone here. On the weekly chart, it has found its 200-period moving average, and look at the support zone here that has been building on that. Have tried and tested below it multiple times, have not been able to break below it. It seems to me that this is holding as support, and any move to the upside here should see us come back up at least to test the 50-period moving average on the weekly, up around $77 and change. And this is very similar to what happened last time. You can see here we had this big pullback, tested below several times, couldn't get below it, and then finally the break above the 9 EMA on the weekly chart was our go signal. So similar here, the 9 EMA is right at 74. So depending on how aggressive of a trader you are, You could play the break above the 50-period moving average here on the daily chart, which is at 73.66, or you could wait for the ultimate confirmation up at $74 to play. But I like the theme behind crude oil right now as well. You know, nothing has broken really in our economy like a lot of people expected. You know, there's been kind of rumors and headlines of potential recession for a couple of years now, and we haven't seen that transpire. And we also have China continuing their efforts to reopen post-COVID and continuing to support their economy. And everything that China does to support that reopening is going to demand more oil. So I kind of see this as a scenario where if we can get back above that 73.66 to 74 zone, there is potential for a nice trade up to 76 and then continuation up to probably 77 or so. So really interested in that. If we go out to gold, gold's kind of a mess. I'm not super interested in gold right now. If we do get a day or two more to come back up and get back above the 20-period SMA on the daily, I might be interested in that. But right now, I'm just cash flowing against gold positions, selling covered calls, and waiting for more of a clear directional signal on gold. Very similar on silver. Silver is actually threatening to break down here again, which kind of surprises me a little bit. It is showing oversold on the RSI, so I'm not planning on playing anything to the downside. Eventually, I will likely play a close above this 9 EMA. You can see the 9 EMA has played a very significant resistance role for a while now, and a close above that would signal a change in character for this chart. So right now, just kind of waiting on silver. If we do get a close above that 9 EMA, as long as it isn't just like a huge candle like this that leaves you in the dust and doesn't give you a chance to enter, I would be interested in a break above that, as long as it's a slow, controlled candle that gives me a good entry with a good, clear stop loss placement. Going out to Bitcoin. Bitcoin continuing to struggle. It put in a doji on Friday, right at its 50-period moving average. It correlates to the kind of support zone from all the chop back here. Right now, sitting on its 50-period moving average on Sunday, I would not be surprised to see this break down. I know there was a bunch of hype for the ETF, spot ETF on Bitcoin getting approved over the last few weeks. We did get that approval. It was a huge milestone in the crypto market. But I had mentioned last week that I kind of felt like this was going to be a sell the news kind of event. And that is exactly what we've seen happen. We got this big red candle after that ETF was approved, and it's just struggled to get any bullish price action ever since. And I think, honestly, this is partially because big financial institutions are now able to access Bitcoin through the spot ETF, and they are going to want to drive the price down in the short term so they can load up and buy more at lower levels. So that's kind of my thesis right now. I would not be terribly surprised to see this drop back down to our previous consolidation zone here around 38,000. Bitcoin obviously is volatile enough that you never really know if you're going to get the sell-off that you want. When it does transpire, it usually is fairly vicious and very quick. But that 38,000, if it takes a few days to a week or two to drop down to that level, it would also give our 20-period moving average on the weekly chart a chance to come and kind of push up into that 38,000 line and act as the next support level. So interested in a price dip, not interested really in the short term unless we get a few days of consolidation going sideways and then a break up. Any break here on the short term that just V-shapes, I'm not going to be super interested in. But again, if we do get some sideways action and set up a new resistance line here, just under 43,000, let's call it, I would be interested in a potential break at that point. But otherwise, I'm actually looking for lower prices here, somewhere down to the 38,000, 38,500, somewhere right in there. Going out, let's take a look at the US dollar real quick, because this is an interesting chart. So we had a massive dap down on the US dollar, and has now actually been fighting back and has regained its 20-period moving average and its 9. If this chart continues to move higher, that is going to put pressure on US equities and make it hard for those breakouts in the S&P and the NASDAQ to stick in the short term. They might pull back and retest that breakout range before moving higher if this dollar chart does decide to push up. Right now, it is showing a little bit of weakness and a little bit of a pivot point here around 27 and 80 cents. So looking to see what direction this chart goes from here. If we toss this out to a weekly chart, it does have the 9-period moving average up above it that might act as resistance if we do get that upward move. So as long as it stays below like 28.06, somewhere right in there, I'm okay with it moving higher. But if it gets back above that 9 EMA on the weekly chart, that is going to be cause for concern to me and probably time to trim some of my bullish positions. Going out to TNX real quick. Similar movement, hitting our head on the 50-period moving average as resistance overhead. Don't want to see this get traction and continue to move higher. On the weekly chart, it does look like it is set for a bounce, and I wouldn't be terribly surprised to see it come back up kind of in line with the previous highs here and up into this 20-period moving average. So not overly concerned about a couple more days of upward movement, but definitely want to see this resistance zone around 43 and change hold if we do get that bounce, and would like to see it turn over and go neutral here for a while. Finally, before we go out and look at our economic data coming down the pike this week, just wanted to point out one chart specifically, and that is Home Depot. I really like this pattern on Home Depot. We had this massive run higher. I mean, in the course of less than 50 days, we went up almost 30%. And then we pulled back and had just this shallow, very orderly pullback back down into support that was confirming the previous resistance zone here. I really love this pivot. And now we are back off to the races, had a little bit of consolidation, and we're now breaking out. And if I put this out on a longer time frame chart, look at this weekly chart and kind of this big back and forth consolidation that really kind of reminds me of the Russell 2000, actually. Break above, pull back, testing that now as support and breaking out higher. Honestly, I don't see any reason why we are not going to see this come back up and test all-time highs here around 420. So I really, really like the look on Home Depot here moving into the coming couple of weeks. And then the other one that I wanted to point out, where was it? Apple. We got a little bit too much of a price movement on Apple here the last couple of days. This gap up was probably an analyst upgrading it just on support for the 200-period moving average, but it looks like it is on its track back to all-time highs as well. And then Taiwan Semiconductors. Where is it? Can't remember the name. TSM, there it is. TSM had a really good earnings report, gapped out, and has now stuck the landing and is trying to run. Any pullback on TSM, I would look for potential entry price. And if we toss this out to a weekly chart and I move my drawing, excuse me for that, any pullback that we see here into this zone that was previous resistance that is now broken out and might act as support and was a huge support level for almost a year back here a couple of years ago. Any pullback into that and then confirmation of the upside, I am very, very interested in playing. The semiconductor space is hot right now, and I don't see any reason for that slowing down. So those are a couple charts to keep on your radar. And finally, as we wrap up, let's go out and look at our economic data. Nothing really to speak of Monday and Tuesday. Wednesday, we have manufacturing PMI data and services PMI data, so that'll be important. Thursday, advanced GDP, excuse me, and employment claims, and then core PCE price index on Friday. So those kind of 3 or 4 reports concentrated on Wednesday through Friday are going to be important for the week ahead. So anyways, guys, I hope that helps. As always, let me know if you have any questions. Hit me up in the comments and smash that like and share button if you would. It really helps me to get out there and share what I'm up to at Escape Velocity Trading here and to help other traders like you navigate the financial markets as it unfolds in front of us. Anyways, take care, guys. Trade safe and hit me up if you have any questions.